Hi everyone and welcome back. In the last few weeks, we've seen the Nifty Realty Index, which contains some of the largest listed real estate companies in India, reach its highest level since about 2011. At the same time, over the last couple of years, we've seen REITs or real estate investment trusts get introduced to Indian markets as a concept, and they've been doing reasonably well since then. As we've spoken about on this channel before, the barriers to entry when it comes to real estate investment in India are quite high, and one of the ways to get around this is to invest in financial products that are tied to real estate. You can do this by buying the stocks of listed real estate companies or also by investing in REITs. So if you're looking to get some exposure to Indian real estate or to add a real estate component to your portfolio and you're not sure whether to go for real estate stocks or invest in units of a REIT, this video is for you. The first major difference here is that real estate companies and REITs have two completely different business models. If you look at listed real estate companies, especially in India, the most common business model for them is the acquisition of land, then construction, followed by marketing and selling to consumers. Some of these companies may even have rented out inventory that they keep to themselves, but this usually isn't a majority of their inventory and their assets. For these kinds of large listed developers, the value addition usually comes from their expertise in construction and marketing and selling these units. If you compare this to a REIT or real estate investment trust, this contains a pre-existing portfolio of rent-earning commercial properties. REITs basically own, manage, maintain, and expand this portfolio of rent-earning commercial properties, but are not involved in the construction or outright sale of these properties at all. The value addition here, just like a mutual fund, comes in the professional handling, maintaining, and running of this rent-earning portfolio. So a REIT basically becomes a vehicle to monetize these rent-earning commercial properties and let them get listed and therefore valued by the market. The next major difference between these two, especially in India, is the diversity of the property portfolio itself. Currently in India, REITs are limited to commercial properties. This, along with the capital requirements to establish a REIT itself, means that most REITs in India are completely tied to large office complexes with blue chip tenants. Compared to this, real estate development companies in India don't really have any of these restrictions, and in fact, a lot of them actually count on residential development and sales as a large part of their revenue. Further, these companies are free to explore other different kinds of real estate development, and a lot of them actually get involved with industrial real estate or even hospitality related properties. If you look at the profit and loss statements for Oberoi Realty, which is one of the bigger players in this industry today, you can see how diversified their portfolio and business interests are as compared to a REIT which specializes in large office complexes which are often tied to large metros and cities. While making the regulations for REITs in India, SEBI has mandated certain things that allow REITs to become an investment vehicle to pass on rental income to investors. For example, REITs are supposed to distribute over 90% of their cash flows as dividends to investors. When a REIT is listed, 80% of the funds raised must go towards income earning properties. All these regulations allowed REITs to be structured in a way that let them be similar to fixed income financial products. Compared to fixed deposits or other such fixed income products, REITs let you get exposure to a different industry with a slightly higher risk return profile than, say, a debt instrument. Finally, real estate stocks and REITs differ in the level of liquidity that they offer to investors, but this might be changing soon. We have recently seen SEBI drop the trading lot amount for REITs from 200 units to a single unit. SEBI has also proposed to reduce the IPO application amount for REITs to 10 to 15,000 rupees. However, SEBI has made this announcement, and now each of these REITs will be expected to individually implement these decisions themselves over the course of the next few months. In a recent video about the real estate industry's recovery this year, we spoke about how residential real estate might fare better than commercial given all the uncertainty about lockdowns and work from home that we've been seeing. And I guess we are seeing this reflected in the markets with real estate companies showing sustained momentum when it comes to residential sales. The differences between real estate stocks and REITs show that these two different products are for investors with different goals and expectations. If you are someone who is looking for a regular income or dividend payout while maybe taking a slightly higher risk than you would with a regular fixed income financial product, then REITs could be more to your liking. However, if you are bullish on Indian real estate in general and not just the small section of the market dealing with commercial rents, then real estate stocks could represent a good opportunity for you, as their diversified portfolios and exposure to different kinds of asset classes could work in their favor. While REITs only concern themselves with commercial real estate and rental activity, by investing in a real estate stock, you can take advantage of the good demand for residential real estate and developments in different areas such as warehousing, industrial, hospitality, and a lot more. So, for all those people that ask me which is better, real estate stocks or REITs, the answer is that it depends on what you want. What is clear though is that these kinds of financial products makes it much easier for investors to get exposed to the real estate industry without having to save up for years and go through a lot of complications that they would have to if they were buying an actual physical property. As always, if you enjoyed the content, please do like the video and subscribe to the channel, as that really does help me out. And I hope to see you again very soon. Thank you.